Diving into Forex, a beginner's playground. This is where your journey into the world of currency trading begins. Forex, short for foreign exchange, is simply the trading of different currencies. It's a global marketplace where currencies are bought and sold. Imagine swapping your dollars for euros before a European vacation, hoping to get more euros for your buck when you exchange back. This everyday activity is a small-scale example of Forex trading. That's Forex in a nutshell. But there's so much more to explore and understand. The Forex market is the world's largest and most liquid financial market, open 24 hours a day, 5 days a week. It operates across different time zones, making it a truly global market. This accessibility and flexibility make it incredibly appealing to beginners. You can trade from anywhere, at any time, using various devices. The potential to earn profits by leveraging the fluctuations in exchange rates is a major draw. The excitement of making a successful trade can be exhilarating. However, like any financial market, Forex trading involves inherent risks. It's important to be aware of the potential downsides. That's where risk management comes into play, your shield against potential losses. Proper risk management strategies can help you navigate the market more safely and effectively. Risk management, your Forex safety net. Think of risk management as your safety net in the exciting yet unpredictable world of Forex. It's not about eliminating risk altogether, that's impossible, but about minimizing potential losses and protecting your hard-earned capital. Effective risk management is the cornerstone of successful Forex trading. Without it, even the most promising trades can quickly turn sour. By implementing a robust risk management strategy, you're essentially putting on your financial seatbelt, ensuring a smoother and safer trading journey. Building your Forex Fort Knox essential strategies. In the world of Forex trading, having a solid strategy is like having a fortress to protect your investments. One of the most fundamental risk management strategies is setting a stop-loss order. This is a critical tool for any trader. This order automatically closes your trade when the price reaches a predetermined level, limiting your potential losses. It acts as a safety net, ensuring you don't lose more than you can handle. It's like setting a safety limit on your spending. Just as you wouldn't spend beyond your means, you shouldn't trade beyond your risk capacity. Another crucial strategy is determining your risk tolerance. Understanding how much risk you can take is essential for long-term success. How much are you truly comfortable potentially losing on a single trade? This question is vital for every trader to answer honestly. This is a personal decision based on your financial situation and risk appetite. Everyone's financial situation is different, so tailor your strategy accordingly. Never risk more than you can afford to lose. This golden rule ensures that you stay in the game even when trades don't go as planned. Diversification is key in any investment strategy, and Forex is no exception. Spreading your investments helps manage risk. Instead of putting all your eggs in one currency basket, spread your risk by trading multiple currency pairs. This approach can balance out potential losses. This helps mitigate losses if one particular trade doesn't go your way. A diversified portfolio can provide stability and peace of mind in volatile markets. Practical tips for the budding Forex trader. Start small. When you're just beginning, it's crucial to take baby steps. The Forex market can be overwhelming, especially for beginners. The fast-paced environment and the sheer volume of information can be daunting. Begin with a demo account to practice your trading strategies and get comfortable with the platform before risking real money. This will help you understand the mechanics of trading without the fear of losing your hard-earned cash. Keep your emotions in check. Staying calm and composed is essential for making rational decisions. Fear and greed can be your worst enemies in Forex trading. These emotions can cloud your judgment and lead to poor decision-making. Stick to your predetermined risk management plan and avoid making impulsive decisions based on emotions. A well-thought-out plan can save you from significant losses. Continuously learn and improve your trading skills. The Forex market is ever-evolving, and staying updated is crucial. There are countless resources available online, from articles and tutorials to webinars and online courses. Take advantage of these to enhance your knowledge. The more you know, the better equipped you'll be to navigate the Forex market successfully. Knowledge is power, and in Forex trading, it can be the difference between success and failure. Ready to ride the currency wave? Taking the plunge into Forex trading can be exhilarating, but remember, risk management is non-negotiable. By incorporating these simple yet effective strategies, you'll be well on your way to confidently navigating the exciting world of Forex. Liked what you read? Share this with your fellow aspiring traders, and don't forget to subscribe for more insightful Forex tips and tricks. Want to dive deeper? Grab your free copy of our comprehensive Forex trading ebook here. Happy trading!